A downward correction of the US stocks is following a sharp rally yesterday. Investors' optimism is dampened by alarming rates of new coronavirus cases in the US and other countries. The US dollar index has been trapped sideways. More American states, including Texas and Florida, make decisions to suspend lifting lockdown in full. On the contrary, the third most populous state of Florida, with the largest metropolis of Miami, imposes additional restrictive measures to stamp out COVID-19. Investors stoke fears that a new outbreak could stall the fragile recovery in the top global economy. Futures on the Dow Jones lost 0.92% to 25,975.5 in the early New York trade. The S&P was 0.6% down at 3,157.38. On the other hand, a rapid rally on Monday proves that traders could downplay the threat of the second COVID wave. This week, the economic calendar lacks reports from the US, which could disrupt the overall market optimism. The focal point today is a report on job openings for May from the US Labor Department. The figure does not really matter. The thing that matters is a market response. Uncertain market sentiment is sometimes interrupted by an urge to sell risky assets. In this context, even a minor negative could trigger market turbulence. The US currency opened today with an active climb. However, it lost most of its gains right before the New York trade. The US dollar index failed to fix above the level of 97 points. From time to time, dollar bulls try to assert themselves, but the greenback is still trading in the overall bearish trend. So the right trading strategy would be to sell the US dollar on rallies. Today, the Canadian dollar is trading in light of the PMI report from Ivy. Originally, market participants expected improvement in Canada's business activity in June. The US dollar versus loonie pair rose marginally on Tuesday amid the greenback's efforts to gain ground. On the whole, the Canadian dollar looks overvalued. Market participants assume the loonie could weaken to 1.39 against its American rival this quarter. Like other commodity currencies, the Canadian dollar owes its strength to rising oil prices, the broad-based weakness of the US dollar, and anticipation of the global economic recovery. All these drivers are likely to exhaust their influence in the near future. Meanwhile, crude oil is trading lower, easing the pace of decline in the New York session. Data on US oil inventories, which are due tomorrow, will set the tone for the oil market these days. That's all for today. Thank you for watching and see you back tomorrow. Bye.